please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and good morning and welcome to Power Breakfast in the Mumbai News Center. I am Anisha Jain and with me is Nigel D'Souza. Well, Nigel, good morning. Waking up to good news that Moody's has upgraded the sovereign rating of India to Baa2.
Absolutely, Anisha. Very good morning. And things are looking good. In fact, you're talking about that Moody's upgrade. That's going to be the big breaking story early this morning. Markets are high in early trade, taking positive cues from the strong finish that we saw on Wall Street. The Nikkei is up close to around 1.5% in early morning trade. That's clearly running away, so that's pretty good news for the Japanese market. When you pull up the other markets, the Kospi is sitting with a gain of close to around 0.8%. So that as well is looking quite good in early trade. Good going there. Pull up the other couple of markets as well, the Taiwanese as well as the Straits. A positive finish on Wall Street has definitely boded well for these markets because they're all trading with gains of around 0.8% to around 1.5%. And that would mean after yesterday's strong finish, maybe in fact we're good for more today. Maybe a 50-point bump up is what we could see. Well, Anisha, people are talking about a 350-point cut that we saw. Yesterday we made up close to around 30% of that. And it looks early this morning that maybe in fact 50 to 60% of that correction that we are talking about is just going to be thrown out of the window.
So many days for the bears, but maybe just a few days for bulls is enough. But on that note, let's move on and see how the Wall Street fared yesterday. Well, the U.S. equities rebound from the consecutive declines following strong earnings from Walmart and Cisco Systems. Wall Street also cheered the key vote on tax reform. The Dow Jones surged around 187 points at close. The Nasdaq ended 1.3% higher, hitting intraday and closing records. The S&P 500 gained around 0.8%, with consumer staples and information technology among the best performing sectors. CNBC's Hampton Pearson gets us a wrap of all the action on Wall Street.
U.S. stocks finishing higher. The Dow up 187 points, the S&P tacking on 21, the Nasdaq rising by 87 points. Home builder sentiment rose this month because sales are strong. Meantime, mortgage rates moved higher this week to the most in a few months, averaging 3.95% for a 30-year fixed-rate mortgage. Walmart soaring to an all-time high and crushing earnings expectations this past quarter as the retail giant's grocery and online sales soar. Same-store sales for the U.S. locations rose for the 13th straight quarter, posting their strongest quarterly domestic sales in almost a decade. E-commerce sales also a particular bright spot, jumping 50% in the third quarter. It looks like the Thanksgiving meal will be a little less expensive this year. The American Farm Bureau says the average cost for 10 people, $49.12, about 75 cents less than a year ago. Turkey down about 2 cents a pound in that equation. That's the action from the U.S. markets. You have a good trading day in India. Back to you in Mumbai.
Well, the House approved a broad package of tax cuts affecting businesses, individuals, as well as families. This move, this moves the Republicans and President Donald Trump an important step closer towards the biggest tax code overhaul if the bill comes to law. It would immediately slash the corporate rate tax to around 20% from around 35%. However, the House bill contains key differences from that of the Senate, especially on how to treat state as well as local tax deductions. CNBC's Yilin Mui reports on the same.
This was a crucial win for Republicans who, frankly, have been frustrated by the lack of points on the scoreboard. The final tally was 227 to 205, and Republicans had said that they were going to get this done by Thanksgiving. Somewhat shockingly, they did, and now they face a new deadline of getting this to the president's desk by Christmas.
We've got a long road ahead of us. This is a very, very big milestone in that long road. We've got a long road ahead of us, and we have a timeline to get this done by the end of the year.
Treasury Secretary Steven Mnuchin congratulated the House on the passage of the bill. He also put out a statement saying that the administration is committed to work with Congress to provide a simpler and fairer tax system. Now, all eyes will turn to the Senate next. The Finance Committee has been debating its version of the tax plan all day. It's expected to vote on that. And there are concerns not only about the inclusion of the repeal of the individual mandate in that plan, but also about the expiration of the individual tax cuts and what that means for how the benefits might be skewed toward the wealthy rather than toward middle-class Americans. So still a lot of tough negotiations ahead.
All right, then, in the European markets, we did see equities are there. They ended in positive territory. Investors were focusing on corporate earnings as well as economic data releases. The French CAC as well as the German DAX, both of them closed with gains of over around 0.5%, while the FTSE, if you take a look at on the screen, well, that was a relative underperformer because that ended with gains of around 0.2%. In terms of data, retail sales numbers in the UK came in higher than expected, and the Eurozone headline annual inflation rate came in at around 1.4% for the month of October. So that's about the frontliners. But the real action was in the broader markets. Pull up the ATHEX. That market was really moving around in yesterday's trading session. In fact, it was the big underperformer, ended with a cut of around 2.5%. And we were quite happy with the bounce back that we saw yesterday. Take a look at some of those emerging markets, the Russian and the Brazilian index. The Brazilian index was on fire yesterday. That bounce back, in fact, it ended with a gain of around 2.5%. The Russian index as well ended with a gain of around 1%. So it was green on the screen largely from the Asian as well as emerging markets.
Okay, let's shift focus now to the currency space then. The dollar steadies after rising overnight against a basket of major currencies. The greenback, however, is mildly lower against the yen.
Well, in the world of commodities, then oil prices they remain firm as investors weigh a mix of factors, including increasing U.S. production and inventories. And also there are hopes that output cuts led by the OPEC would be extended. Brent crude prices unmoved early this morning.
From the precious metal space, gold prices are steady as investors weighed the impact of an expected rise in U.S. interest rates against uncertainty over the direction of U.S. fiscal policy. On to the big story today, Moody has upgraded India's sovereign rating to Baa2 from Baa3. Lata joins us now with more details on that. Lata, good morning. Tell us what are the implications of this particular rating upgrade and how do you read the outlook change? Now they have changed it from positive to stable. Is that a negative implication at all?
Oh, well, first let me get that nomenclature. We were Baa2 positive, which means I see enough to upgrade you. And therefore, we were expecting this upgrade. Baa2 positive indicates that you are in for an upgrade. Now, when you come to Baa3, you can't be put on positive. Now, you're Baa3 stable. Now, if there are any further implications, like there is an outstanding rise in tax to GDP ratio at the end of this budget, then we may expect that they will put us at Baa3 positive. And then you can expect a further upgrade. So this is, exactly like upward risk, downward risk that we talk about. So we were Baa2 with an upward risk, and now we have come to the next level. So immediately you will not get an upward risk till fundamentals change. And it's also important, just before I finish the implications, you probably said this, but I just want to reiterate that what they are saying is it is continued progress on economic and institutional reform, which will over time enhance India's growth potential. So the reforms put in place is largely the tax reforms, and they say they reduce the risk of any increase in debt. Because the tax implications of GST are very good, probably because of the various anti-black money operations like linking the PAN card to bank account. I mean, I'm not sure how many of these have impressed them, but this means higher taxes and therefore the country will borrow less, lower fiscal deficit. Also, the reiteration of the government that it will not renege on fiscal deficit. So our debt will not be high and our ability to generate equity, which is taxes, is high. That will also mean higher growth, which in itself is a virtuous cycle, giving you more taxes. Those are the reasons why you have got, that is the rationale for the upgrade to Baa2, saying that reforms will sustain growth very quickly. First, very positive for the rupee, very positive for the equity markets. Bond markets is, of course, a sentiment positive, but we already have FII limits, both on corporate and on government securities. Government securities has been reached long back. Even in corporate bonds, we are almost there. So we cannot get further investments in debt right now till we up the limits. But, money will definitely come into equities, and, of course, the rupee gets stronger. I believe we are being joined by Sanjeev Sanyal, Principal Economic Advisor to the Finance Ministry. Good morning, Sanjeev. What a good morning it is. Your thoughts on this very, very big news that's hitting us. I think it's after decades that we are getting, first time ever that we are getting a Baa3 rating.
So, yes, it's good news that we have moved up to Baa2, and it's a recognition of a long series of reform measures that have been done under Prime Minister Modi, which included, of course, the bankruptcy laws, the cleaning up of the banks, and more recently the recapitalization. Then, of course, the GST. So, it's an accumulation of a large number of measures. And, in some ways, this is an endorsement of the, long-term reforms that have been put in place.
Fair enough. Sanjeev, you know the global markets better than anyone else. How would global investors react to equity, rupee, bond?
But generally, obviously, this is a positive. So in that sense, they will probably view it positively. But remember, many of these measures that I mentioned are very well known to global investors. They have been aware of these for a while. So while there will be perhaps a blip up today because of sentiment, but the fact is that, many of these measures are well known. And so this is just an endorsement, a step forward, and we in the government will continue to move forward with other measures.
Actually, NDS, in the NDS market, rupee is already strengthened to below 65. Yesterday, I think we closed at 65.23, did we? So it's, I think the rupee is already stronger by about 25 paise. I understand. This is someone just messaging me that in the NDS market, it's already higher. Sanjeev, considering that these rating agencies are such a stickler for fiscal deficit, and they have gone on to say that the government, the reforms put in place have reduced the risk of a sharp increase in debt. So clearly they're very pleased as well with the FRBM. Therefore, do you think this redoubles the pressure to stick to the laid out fiscal path, the 3.2 and thereafter?
This recognizes that we are serious about fiscal consolidation, and that's in fact what has happened over the last several years. Going ahead, we are obviously going through a major fiscal shift in terms of the GST introduction. So, those revenues have not yet stabilized. Nevertheless, we remain committed to the, the medium-term fiscal framework. So, and people understand that. So, we will, stick to the medium-term fiscal framework. I think that's, we have exhibited that in the recent past and hope to stick to it into the future.
Okay. No, every now and then there is a fear, or statements from the government are interpreted to mean that probably this year's 3.2 will not be reached, or, could be breached by a few basis points. Does an upgrade like this, redouble the pressure, or at least incentivize India to stick to 3.2? No.
Look, government policy is not being made just for upgrades and it's being made because these are good ideas, which we are doing in order to manage an economy in the medium to long term. So while these are good endorsements and we like them, let's be clear that government policies, reforms, etc., and including fiscal consolidation would have been an important issue, irrespective of whether or not rating agencies existed. So it's not like just because if we've got an upgrade now we have extra pressure to behave well. It's not like once you get the Nobel Peace Prize you have to be more peaceful. It's not like that.
No. Would the fiscal deficit anyway therefore stay at 3.2 is what you're saying? With or without Moody's, we would have been at 3.2? Is that what you're saying?
what we are saying, with or without Moody's, we will stick to a long-term fiscal consolidation, and we remain committed to it. And the point is that we have been committed to it in the last few years.
Okay.
And we are currently going through a major tax reform, where the taxes have not stabilized yet, as you very well know. So that is why we don't want to put exact numbers, but we will stick to it to the extent possible.
All right. Sanjeev Sanyal, pleasure speaking with you. Thank you very much for joining us and sharing the good cheer that the country has just been upgraded from Baa3 to Baa2 by Moody's. I'm also being joined by a market veteran, Anant Narayanan. Anant, you have always been with us whenever key events happen, and sorry to have disturbed you at such an early hour. But your thoughts on this upgrade?
Morning, Lata, and and thank you for disturbing me, to be honest, with some very good news. I think it's great news for the country. If you recollect, in the beginning of the year, we were expecting an upgrade after GST implementation, but somehow that expectation kind of whittled away through the course of the year.
Yes.
At least from my perspective, this was unexpected at this point in time, and I think it's a good, positive endorsement of our country. It's kind of funny. We've always attracted better pricing than what the rating agencies have indicated.
Okay. And
it's always great to see rating agencies in some ways catch up with the way the market envisages India anyway.
Okay.
But for asset classes, I think it's positive for all Indian asset classes. One can argue that this is more to do with sentiment than actual flows, etc. But I do think for the rupee and for equities, this can be a shot in the arm straight away.
Okay.
You must remember that FIs have not participated with that enthusiasm in the equity markets. And also on the rupee, it's possible that the positioning is on the lighter side. So both on rupee, particularly on rupee, I do think rupee will open stronger. And again, of course, on the equity markets, I think FIs will have to wonder about how much and how they manage investments going forward.
Well,
bond markets...
I believe in the NDS market, it's already below 65. 65.32 was where we closed. So below 65 would mean already a 35 paise rally in the rupee. Yeah, sorry, you were saying bond markets.
Yeah, so I think 25 to 50 paisa rally in rupees is quite possible. Bond markets, it's a little more trickier. I think the initial reaction will be positive. Anyway, the market's been waiting for a correction after a pretty sharp move up in yields. And this will be a good sentiment boost. Actual FI flows into bond markets, of course, there's not much of room available for that, given the open quotas are pretty much used up. But I do think that all asset classes will benefit from this in terms of sentiment and in terms of actual price movement, at least for today.
Okay. I just want to read how much they are insisting on the debt part. The decision to upgrade ratings is underpinned by Moody's expectation that continued progress on economic and institutional reform will over time enhance India's growth potential, and its large and stable financing base for government debt will likely contribute to a gradual decline in the government debt burden over the medium term. In the meantime, while India's high debt burden remains a constraint on the country's credit profile, Moody believes that reforms put in place have reduced the risk of a sharp increase in debt, even in potential downside scenarios. Are you getting the feeling, Anant, that this would be an incentive and a pressure, a moral pressure, for the government to stick to 3.2% fiscal deficit?
If this was supposed to be a moral pressure of any kind, they would probably have to wait for the end of the year before they would have upgraded. This is a funny way of incentivizing by, giving the price first and then saying, now please go and achieve it, right?
Okay.
Look, I think I can't see, even if there's a slippage in fiscal right now, from let's say 3.2 theoretically to 3.4 or 3.5, it's not as if Moody's is going to stand up tomorrow and say, now I reverse the rating. It'll just be bizarre, right? Yeah. So I think they've pretty much taken a long-term view of things. Yes, there are question marks about fisc in the short term or even the medium term. But I think given the fact that we've had GST implementation and possibly this bank, recapitalization being discussed alongside other reforms, has probably given Moody's enough confidence that in the medium term it still works out fine.
Well, a final point, the note says Moody's has raised the long-term foreign currency bond ceiling to BAA1 from BAA2, and the long-term foreign currency bank deposit ceiling to BAA2 from BAA3. Is that a very big difference? BAA1 sounds very good.
It does, but I'm not sure what the implications are, Lata.
All right. Well, thank you very much, Anand, for joining us and laying out the implications of this. Back to you all. We will have a lot of guests through the day. And as Anand points out, equity market participants from offshore have not been very enthusiastic in the past few weeks or even months. They have been negative. This could turn the tide. Certainly, it will mean because the rupee is stronger, their feeling would be that if we come with the money, rupee is not going to dilute it. You will go back with both dividend gains, capital gains, as well as the currency being maintained. So that would be an incentive for equity guys to come in. Bond guys would, they are waiting at the door. There will be a stampede if you open the door. But Government of India allows only 5% of outstanding government securities to be owned by FIs. We don't want our debt to be financed by foreign guys. After that 1991 IMF experiment, we have always wanted our debt to be financed by Indians. Indian banks, not by foreigners. So I don't see them opening that window, though there will be immense pressure on the government to open that window. But my sense is equities will make up for that.
Okay, Lata, thanks so much for coming in from Moody's. So things are looking good. Remember, in yesterday's trading session, we rallied close to around 100 points. That was a pullback of close to around 30% of what we lost, the 330, 340 point cut that we saw in the earlier trading sessions. And if you go by the SGX Nifty, well, then close to around 50% of those losses that we're talking about will be covered up in the first stick. Mangalam Malu joins us early this morning. Morning, Mangalam. What a good Friday morning for the Bulls.
Absolutely, Nigel. What a good Friday morning for the Bulls. In fact, as Anant was saying earlier, good to be disturbed in the morning by this sort of news itself. The big thumbs up really coming in from Moody's. You guys have been talking about an upgrade, the first time India's ever got that BAA2 rating as far as our macros are concerned. So the SGX Nifty definitely showing that uptick that you spoke about. 10,320 plus is the opening tick, but also watch out for the bonds as well as the rupee. We will keep an eye out on those parameters as well. Some strengthening seen in the bond prices as well as the Indian rupee. Yesterday, after a long time, it was good to see some green on the screen. Though I wasn't personally there, I was following it. And the Nifty and the Sensex traded and ended at the high point of the day. If you take a look at the contribution, though, Infosys, that one was the one which led Nifty from the front. And had it not been for Infosys, perhaps we would have not been above that 10,200 mark itself. From the mid-cap space, though, I was a little jittery given the sort of rally that we saw on stocks that were battered out of shape in the previous session. So the likes of Reliance Group stocks, even the PSU banks, which lost on account of bond yield moving higher, we saw some recovery there. So the big question really, is this an up move or just a bounce back from the 50-day moving average? Well, the answer to that would be, can we go ahead and sustain above those 20-day moving average levels, the ones which SGX Nifty is indicating? We're getting strong global cues too. Don't ignore that. The SGX Nifty was up even before we got this ratings upgrade, and on top of that we have the support coming in from short covering. The FII is still 49% long in index futures. That means 51% short in index futures. We saw some short covering in calls yesterday. Let's see whether that goes by and we add further fuel to that fire.
Okay, Mangalam, so clearly the macro cues is what is going to take the forefront today. But what about the stocks that should be in focus? Any particular stock list that you have? We'll
definitely watch out for a lot of these banks on account of the strong bond yields as well as the rupee movement. We'll keep an eye on the rate sensitives. But then we get some news coming in from Chris Wood's model portfolio, which has added Dalmia Bharat and Bharti Airtel. They've cut their positions in ACC and Z, so those stocks may react. Bank of Baroda, PSU banks were moving yesterday, and that one's moved into the QIP bandwagon after Axis Bank raised some capital as well. So they've approved raising equity worth nearly 6,000 crores. So watch out for that. Just Dial, important stock to watch out for, because one, it comes out of the F&O ban, so fresh positions for longer term, more than 1 day can be taken on that. And on the same day, Nomura has raised the target price to 635 on that counter. Earlier, Sanjeev Sanyal was talking about FIIs investing in the Indian markets. Well, the FIIs have increased, or the RBI has increased the FII limit on ICICI Lombard Boulevard, Petronet, LNG and Edelweiss. So these stocks are something that the foreigners can take a look at. Thangamal Jewelry, one of the broader market stocks, saw some influential investor buying out there. Kenneth Andrade's portfolio bought that share, as well as Dixon Technologies, where we saw Birla AMC buying about 1.8 lakh shares. HDFC Life lists on the bourses today, watch out for that. And finally, JSW Energy. That one's likely to be excluded from F&O from the February series, currently in the F&O ban.
Okay, Mangalam, thanks so much for that. Well,
the most important macro cue for the Indian economy today will be the ratings upgrade coming in from Moody's to Baa2. But what about the cues from the derivative space? Mangalam is joining back to tell us more. Mangalam, take it away.
Well, Anisha, you know, you spoke about the macro cue, and because of which the kind of up move that we're seeing in SGX Nifty. Remember one thing from the futures and option space. Yesterday we did see an up move, but the FIIs did not run for cover as far as the index futures are concerned. And right now they're still net short. That creates a lot of headroom for short covering if the morning uptick is sustained. So if you take a look at the FII long exposure, 49%. That means they're still 51% net short on the index. Yesterday, the FIIs bought about 3,000 plus crores in index options. Obviously, that was a little muddled because of the Bank Nifty weekly options expiry too. But the short point is that a wee bit of uptick on the Nifty, and the India Wix cracked, and the Nifty PCR, the put-call ratio, rose from 1.13 to 1.21. And why did that happen? Well, it wasn't as much as put writing that took place as it was short covering in index call. So if you take a look at the 10,200 put, that saw a wee bit of writing. 10,300 call and 400 call saw shorts running for cover, and we still have a formidable amount of shorts on the call side and index futures. So the up move, if it sustains, that would create further fuel for more short covering. As far as stocks are concerned, Indiabulls Real Estate comes out of the F&O ban just dial after the Nomura upgrade coming in. Price target of 635 is out of the F&O ban. Watch out for JSW Energy, still in F&O ban, but gets out of the F&O trading from February series. I'll watch out for Manappuram. All the gold financiers moved yesterday. There was some short covering in Muthoot Finance as well, and a lot of long positions added on public sector banks which rallied yesterday. But the short point is an up move today would lead to more short covering.
Absolutely, Mangalam. It's a Friday morning. It's the good music for the bulls early this morning. Everything looking positive. The big question is, will the final waltz be done by the bulls by the time